Hey everybody. So interesting morning in the stock market, right? So we just got that big jobs report. This is what I was talking about yesterday. Remember yesterday gave you that free pick, right? CCI. And there was reasons for that, right? You look at our company, we're an options company, accelerated growth, things like that. But there's an important part of your portfolio, and it's the other part of your portfolio. You shouldn't be 100% in options, very risky and stuff like that, right? Something goes wrong, your portfolio is gone. So we teach to keep a certain percentage in options, but also keep a certain percentage diversified in stocks that are going to protect you in moments like what we're potentially getting into right now. And CCI is that type of stock. Take a look at CCI, see the characteristics of it. If you're new, especially if you're new to investing, I don't like to use the word trading. Let's call ourselves wealth builders, okay, going forward. Um, if you're a wealth builder and you're looking to build some wealth, how do you do it? Well, you want to do it like Warren Buffett, right? Where you always hear that, be like Buffett, but then all of a sudden they tell you, hey, buy this, sell this, buy this, sell this. You saw what Warren Buffett did this week, right? Or last couple months ago. Him and Charlie Munger repositioned a little bit, right? They bought a little Chevron, they lightened up a little Wells Fargo, they did this, they did that. Now they're set for the year. They kind of see what's building here. We're kind of in a tempest right now, and really the result is looking more and more inevitable. The stimulus is still not happening. Now, this is not about politics, okay? I don't care if you're Democrat, Republican, Nazi, socialist, I don't care what you are. You're a wealth builder. This is about your money, okay? The only side you're on is your money. And, you look at the way this is starting off. We're now rolling into the last month of the first quarter. We've had a vaccine since October. We've had a new administration that was elected on the promise that if we are elected, you immediately get a $2,000 check. Think about Georgia, right? None of this has happened, and the economy is showing it, right? Let's go share screen here, guys. Let me pull you up a little screen sharing here, and we can kind of get into it. Uh, that's not the screen. Let's pop on over to Market Watch. I like Market Watch, guys, for economic reports. It's very clean. It's very condensed, in case you guys are wondering. You can see the link up there. You just go to marketwatch.com for your new traders. But you see on Thursday, right? Thursday. So we started off the day, we had Fred Bernard, blah, blah, blah. But then the rubber hit the road, right? So we've added about just under a million new unemployed claims. Then on top of it, we haven't taken anybody out of the system. Okay. Then you throw in this housing starts, right? And housing starts contracted. Building permits went up. So who cares though? That's only the rich, right? How does that help mainstream America? It doesn't. Okay. We know, anyways, through COVID, that construction has actually remained pretty firm. Then you got your import index, right? We are now importing too much, right? We're buying stuff more than we're selling stuff. That's another good thing for an economy, right? And you had your Philadelphia Manufacturing Index. Now, when you see this makes sense, right? You see contraction, right? Not as bad as they expected, but contraction. So they'll use that. But look, guys, this is what I'm talking about. You see how futures are down pretty deep this morning. Let's see how deep this cut goes. And this goes back to what I was talking about, CCI. Now, of course, like we're short the spider right now on some options. We're short Coca-Cola on some options. We've got a couple right now. We've got about 4 option plays. One expires tomorrow. So really, we've got 3 plays on the table. We got a little VIX short. In case this melt up kept going, we've got VIX short. But mostly we're short in the market right now because we kind of saw this coming. It's a tempest, guys. There's only one cure for what's going on right now, and that's reopen the economy. And it's just not reopening. And I want you guys to think about this, okay, guys? Think about the the employment structure of the United States. The largest employer in the United States is the United States government. Think about how many teachers unions are refusing to go back to work and things like that, right? I'm not picking on teachers. They're doing what they got to do. But this is a big part of your government, right? Your government, now your politicians and stuff, of course, are collecting paychecks and stuff. They've never even heard from this. But mainstream America, everything below a politician or a CEO or a celebrity or a athlete, a well-paid athlete, is suffering right now, right? And the suffering's getting worse. Then you throw in a snowstorm, right, where grids go down in Texas and stuff. It's just a big tempest here. So let's see how deep this cut goes, guys. We're gonna stay with these shorts for at least a day or two here and see how this goes. If it reverses quick, we'll exit it. But look, the point of this is what I was talking about with CCI. What if this cut is deep? What if this market takes 10% off over a week or something, which it's done before and it can do again? What if the sentiment switches so quickly, right? We talked about it a couple weeks ago. At what point does this market say that the recovery that it's seen is priced in? You had Walmart report, right? Walmart had great earnings, but they warned things are getting softer. One angle on that would be that, well, maybe some of the small businesses are opening, so they're starting to pull sales from Walmart. Walmart doesn't care about that. Walmart is a huge mega corporation. Mom and pop down the road is not going to hurt Walmart. What they're seeing is a lack of economic growth. It's all about the economy, guys. Keep your politics in your pocket. It's all about the economy and wealth building. And is this the moment when the market says everything's priced in? Well, if it is, then you're going to be glad you own the CCIs. You're going to be glad you owned good stocks with good dividends, because these are stocks, guys, that when the market goes into a flux, you don't have to do anything. You just leave them and let them work for you, right? They're building more with dividends. They're buying themselves cheaper. You know, their balance sheets are strong. So as the market recovers, they're going to recover with it. You want to have that firmness in your portfolio. So take that to heart. Okay, guys, we'll keep an eye on that CCI pick, see how it does over the next few months. All right. Other than that, guys, let's see how this market shakes out. You know, there's a lot working against it right now. Again, yesterday we had inflation, right? The Fed has no way to fight inflation except to raise rates. And what's every Fed speech been about, right? Oh, we're going to accommodative policy, right? Well, you can't have accommodative policy and high inflation and high unemployment. Cheers to that one. So look, guys, let's see how it shakes out. Okay, you guys, just be cautious. Okay, be very cautious. And before you do anything, before you take on any extra risk in your portfolios, before you take on any extra wild swings, build that framework, just like Warren Buffett does. It's very simple to follow Buffett. You buy, you hold, you reanalyze after a certain amount of time, you restructure, you buy, you sell, you hold, right? It's a long game. Anyways, guys, you have a great Thursday. Okay, we're rolling into the weekend. We'll be back tomorrow morning with another update. Other than that, you guys have a great and prosperous day. All right.